once you understand the inner workings of like the financial and monetary system, you realize just how much of a joke it is. The problem with that is that the Ponzi can collapse at any minute. But you also know that they have to keep this house of cards up by any means necessary. And those two things are very hard emotionally to counteract.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show where Bitcoin just hit a new record, and so did your dopamine levels. I'm your host, Jay Hamilton. It's Monday, October the 6th. We got the Bitcoin all-time high. Is Ethereum next? What about the altcoins? Where do we go from here? Billionaire Paul Tudor Jones was on CNBC this morning saying that he expects a massive market move upwards. He is euphoric. We're going to dive into that, where we think the cycle goes from here. And also, tens of thousands of Robinhood users are reporting that they are not able to access their accounts amid a surge in AMD's price. We're going to talk about that and so much more. Today, we're joined by Dominic Ryder, ex-TradFi, worked at one of UK's top 100 wealth managers, ex-VC fund manager. He's now spent about 5 years in crypto building Alvera, where he is the co-founder and leading the movement towards more tokenized stocks and tokenized equities and many other things. Before we jump in, if you guys did not see the pro report that the team put out this past weekend, actually two pro reports they put out. One is on the macro setup right now and why it is looking so good as we head into Q4 and how to position your portfolio accordingly. And the second is our October market pulse, where we look at our expectations for October. We also allocated another bit of capital into the markets with this, and we talk about how we thought about that allocation. So hit the link in the show notes and check out those two reports. They are killer. Before we jump in, today's episode is brought to you by Nexo, the platform that grows your crypto without locking it away. It's also brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. With that, Dominic, welcome to the Milk Road Show.
Thanks for having me. Good to be here.
Pleasure to have you, my man. Okay, we got to start with the news of the day. Bitcoin, all-time high, highest weekly close ever this past week. How you feeling?
Well, as an altcoin founder, it doth butter no parsnips. It doesn't unfortunately do anything for me. I would love to be exuberant, but let's face it, 99% of crypto's mind share really is not exposed to Bitcoin. I feel bad about that fact. Daily, I think I do not own enough Bitcoin. I don't think anyone actually does, because the alts are just a little bit nicer to look at. And there's something to that. But unfortunately, it means that whenever you get an all-time high in Bitcoin, it's like, okay, when ETH?
So what that makes me say is exactly, when ETH. Like, when ETH, what's your thoughts? We're close to an all-time high. We're creeping up. Everybody's circled 5K.
Didn't we? And then pulled back. It was like it was a pathetic little nudge above.
Yeah.
But we celebrate.
So what do you think? I mean, I'm going to pull up a quick chart here, because this is where I go when we talk about Bitcoin hitting all-time high versus and what happens next. Is Bitcoin dominance is the chart that I always pull up here. And what you can see in this chart is Bitcoin dominance dropped and recently has been creeping back up to 55, 56%, depending upon exactly which metric you're looking at. It got as low as, I think it got down to it dropped a little bit coming off of its high of, we were, up in the high 60s. And now it's been pumping a bit over these past 2 weeks. And typically what happens is, this is the occurrence, right? We retest Bitcoin dominance, we see a surge in Bitcoin, and then it flows into everything else. And if we have another alt season like we had in 2017, 2021, we would see Bitcoin dominance drop significantly and the alts would pump. What are your thoughts?
I mean, I think that alt season maketh man. Honestly, I think back to 2021 and the exuberance in like the alt market, and I question, can that be achieved again? Because everyone was going pretty mental and you think back about NFTs, and there's like a week or 2 weeks where you have this meta and this hype and this craze where anybody who launches into that meta will do incredibly no matter what. And it was just random people settling a 10,000 NFT collection, and that's like NFTs are the old measure. When you get Bitcoin dominance, if you start seeing NFTs pick up again, that is going to be a big flag that the run is almost over. And I did get that a bit when I saw these NFT digital asset treasury strategies launching. That made me wonder, because it's not the time to be getting that level of weird financial innovation. That comes usually a bit later when you start getting these structures that are meant to provide this everything go up forever, and people start to actually buy it. And digital asset treasuries are, any tool that's put into a free market to try and control prices, whether that's capping the supply, whether that's capping the price of a commodity, or these sort of digital asset treasuries, when the market goes well, there's no problem. And everyone is happy and people get carried away. And these sort of vehicles are a bit late stage market for me.
But we're not. Okay, so let me ask you this question. Because this is a great topic to bring up. Where are we in the cycle, right? Because like I totally hear what you're saying. I'm guessing our listeners aren't following this, but like there's this thing happening right now with punk strategies, which is this basket that somebody made where they go out and as their token price raises, they go and they buy CryptoPunks, right? And then they have this like flywheel where as they buy more CryptoPunks, if the price of CryptoPunks goes up enough, then they sell them and they take the profit and they put it back into their token and they burn their token. So it's a very interesting, like as you said, it's a very innovative financial, honestly, could be considered a bit of a Ponzi, like it probably crosses over into that category. I am not telling anybody, but these types of things only happen
today. The whole monetary system is the definition of a Ponzi, and so you can't actually. If you think about it, you issue treasuries and bonds in order to refinance your debt because the interest on the existing 200% GDP debt is so high that 200%. That's literally it. In like Japan is 350. And that's why you're having these problems, because inflation.
On that note, did you see that Japan new prime minister, and they are? I think this just happened. Is Japan voted?
Yeah, isn't she like really tough on China, like anti-CCP, like and in favor of rebuilding their military?
And also very much in favor of fiscal policy and wants to print more money and inject.
Basically, so she's taking the Trump playbook.
Yes.
To Japan.
Yes.
Well, Japan is the all-father of the Ponzi. They are literally the creator. The Japanese central bank is the monetary wizard. That is Merlin of the world. Like they invented negative interest rates. They invented quantitative easing. And then when that failed, they invented yield curve control. And so all of these things are just, how do we pump up a sinking ship? Mm-hmm. It's the monetary playbook where there used to be days, bear in mind, you got 350% GDP to debt ratio in Japan. Nobody is buying Japanese debt. Nobody does. And so when the US government issues these bonds and securities, people buy it because they trust the US government will pay them back. The buyer stops stepping up in Japan. And when there's nobody to fund the Ponzi, you have two options. Either print shit tons of money in order to prop the Ponzi up and try and push it down the line. And so that's what they've been doing, is that the Japanese central bank owns over 65% of the Japanese debt, which they buy from the Japanese government, which is then given money for this, which they apply interest on, and they issue debt, which the central bank buys and holds on its balance sheet. And it's just the Japanese government trading with the central bank, and the whole monetary system is propped up by that. There would be days in a row where not a single organic buy or sell of Japanese debt was ever made. They invented the Ponzi.
I don't want to go too deep down the macro conversation right now, but I do. Let me just wrap up this by saying I think a lot of people think that this debt problem is a US problem because that's what the media talks so much about. But this debt problem is a global government problem.
Worse everywhere else.
Exactly as you were saying, it is actually worse in other places. And the outcome of this is the exact same story, whether you're wherever you are in the world. Currency debasement is a runaway train, and there is no end to that. There is no end to that. So that is
stuff in the
frame
way.
it in that way.
But this is the thing. This is where you have these. We haven't experienced it in the West, so people aren't as knowledgeable or think about it. But people don't realize the speed that inflation can turn to hyperinflation, because it's behavioral. If you become so used to the fact that when you next go to buy something, it's gone up in value, you are incentivized to buy as much as you can as soon as possible, because you know next time it's going to be more expensive. So suddenly everyone is incentivized to spend all of their money as soon as they get it. So what happens? Pushes prices up. Next time again, they want to get in. And it leads to basically economic hoarding, where you're trying to get everything that you can because you know that it's getting out of control. And it takes like a couple of months and you're using the currency for wallpaper, like Weimar Republic before World War II in Germany. People have no idea just how quickly it unfurls. And it's scary to think about because it's short.
So let's this question might lead you down the macro road, but I don't want to make this too much of a macro conversation today. Although I do love talking macro, and crypto is macro in the end. But let's talk about, before we start recording, you said you're a little bit more bearish. You're a little bit more bearish than a lot of people are right now. And there's people on both sides. But what I'm really noticing is that every day it feels like the bears are coming over to the bull side currently. But just let us step back for a second. What is your thesis right now when you look at this cycle, where, how far we've come in this bull cycle, right? When you look at the rest of Q4 and the rest of this year, how do you feel?
I mean, there's a Friedrich Nietzsche quote, which is, and once you are awake, you shall remain awake eternally. And that's what working in finance does for you. It's almost annoying to understand. Once you understand the inner workings of like the financial and monetary system, you realize just how much of a joke it is. The problem with that is, that the Ponzi can collapse at any minute, but you also know that they have to keep this house of cards up by any means necessary. And those two things are very hard emotionally to counteract, because one part of you knows it can all be so over so quickly, but you also know that at that point in time, they will throw the kitchen sink at it, because it's what they always do. And it's the only thing they know how to do. Print more money. That is it. Let's call it negative interest rate. Let's call it quantitative easing. Okay, let's call it yield curve control. It's all the same thing. It's just, how can we get the public to believe that this is okay again? That's all it comes down to, faith, which is again scary. But so I'm always mixed, because I'm always looking for signals that could validate the fact that it gets crazy. Like, these bubbles get insane. And until you've experienced your first bubble, you do not have any idea how certain you are that it is not so over when you are in the peak and grips of a bubble. Like, you honestly believe, no matter who it is, that it's going to last forever. It feels like it. It feels like you're early. You tell all of your friends how early they still are. Usually at that point in time, it's no longer early. And so
are we early? Where do you think we are?
Overall, yes. As in, if you are buying solid, established chains, tokens, L1s that you believe are not just the hype, like they have staying power. Because I was buying stuff in 2021 I thought had staying power. And I was 99% down on like some of it. And these were major coins, top 50 coins. Your alts can't necessarily protect you. You just need to check the temperature always of the overall sentiment in the market. If it feels too good to be true, and this is why the financial engineering with like digital asset treasuries gives me red flags, because people forget that, yes, institutions are pumping our bags. This is great. More money flowing in. We're all feeling it. Our industry is getting noticed. We're no longer as much of a joke, even though we are god awful in comparison. We're not as much of a joke as we used to be. Let's not mess this up. But these treasury vehicles are just the definition of, people have forgotten who the counterparty is. They've forgotten what the institutions are like, and they've never dealt with the banking system. So in 2008, we had these new products. I'm saying it like I worked there. I was like, I don't even think I was a teenager. So I was probably like, I'm not saying we as in, I am the financial system in this analogy. So the financial system did what it does, and it securitizes, that was the tokenized back in the day. Securitized, because securities could be traded on an exchange, which adds liquidity. And that, therefore, just like crypto, is a good thing. And so the bond department used to be the weirdos. Like, if you worked in bonds, you were just like, you weren't fun at parties. And then basically they started securitizing everything, and suddenly all of these mortgages get batched together, and all of these like debt obligations get batched together, and they sell them as a security, because then it gets a rating and you don't see the shit in it. You just think it's whatever it says it is. And the bond traders overnight started turning into rock stars. Basically, what ended up happening was the Goldman started issuing these securities to AIG on a credit default swap. So it became a new product, credit default swap. It basically meant if something crashes, then rather than you start to get paid the yield as the person betting against it, but if it goes well, you have to pay out dividends. And so after these were invented, Goldman basically started putting all of their like terrible debt, terrible mortgages, everything that was just going like written off, they would put it into a massive vehicle and they'd sell it as a credit default swap to AIG, American Insurance Group, I think is the acronym. And Goldman then took heavy short positions against the securities that they sold them. And so when they failed, not only did the whole like American Insurance Group collapse and go bankrupt, Goldman collected on the way down from the products that sank the ship. And so I was at this crypto fund managers event 2 weeks ago, and on the panel was Wintermute, LaserX, big like crypto funds, and they were up there boasting about the fact that the investment banks are the ones structuring all these digital asset treasury deals. And immediately my alarm bells go off thinking, oh no, because I don't think any of these crypto fund managers remember what happened in 2008. I don't think anyone remembers the actual behavior of the banks in 2008. They knowingly destroyed like every bit of public infrastructure. They literally offloaded all of their terrible debts onto like public pension funds, getting it off the books. And then once it was done and they were adequately set to make money from the collapse, and they had enough bets against it, they let it all go. They collapsed the world economy on purpose to get it off their books. And so now it's a boast that the investment banks are the ones structuring these deals. And so if you are an investment bank and you're structuring all of these, and again, the panel was saying, you won't believe some of the tokens now that we're seeing come through on deal flow. And if you're the investment bank and you know that what you're doing some digital asset treasury for some meme coin, why is the investment bank doing that, I wonder? Like, why are they attaching their reputation to that? If it's not, they can't surely be thinking that is going to do well. They know eventually it ends. And people think that like the investment bank would not bet against the own like deals that they are making. And people have just forgotten how bad the banks are. And so people will be buying these because they keep going up, keep going well, and they're going to be holding the bag as the investment banks offload them onto everyone else once they have sizable enough shorts.
So it sounds to me, I'm gonna make a bit of some assumptions here, and then you can correct me if I'm wrong. It sounds to me like your view is sort of similar to Paul Tudor Jones, billionaire hedge fund manager Paul Tudor Jones was on CNBC today, and here's basically what he said. I'm gonna summarize what he said. He said that the current stock market conditions mirror the 1999 dot-com bubble. It's fueled by AI hype this time, obviously a different tech bubble, but tech bubble nonetheless. He commented on the growing U.S. budget deficit, and then the Fed rate cuts and the impact that has, leading to what he believes is a blow off the top bull market rally that's coming, and that he thinks that the bubble will burst and there will be a crash similar to 99, where there was a 78% crash in the NASDAQ. And obviously if there was that type of stock market crash, that would affect crypto as well, because all the risk on side of crypto is going to be very closely tied to that.
Yeah.
Is that what I'm hearing from you is like you're bearish, but I don't really feel like you're bearish like now. Like I feel like you maybe have a similar view, is that like bullish short term, but you think that there will be a big crash at some point because of all of this financial engineering that's happening.
There's two things that you need to get out of the way of, and that is a raging bull run and raging hype. As in, you make more money buying tops than you ever will like by being cautious and waiting for a dip. Time in the market beats timing the market every single time, historically and evidence-based. There's a chart that if you took out like the top 10 performing days of the S&P 500 over the past decade from a portfolio, then the effect on your performance just by the compound interest alone is about, you made 50% less money over 10 years just from missing 10 days. And people don't realize that, you get scared. Everyone pulls their money out at the wrong time. And everyone holds on too long. Just whatever you think, accept that you're probably wrong and you'll do much better. As in, you just have to give yourself over to the fact that the market is the opposite of your emotions. It is for everyone. That's why everyone does so badly. And when you finally accept that and you start counter trading your emotions, then you will finally do well. But it's so hard to get over that of, I want to buy this, which means you've been led to that decision at some point. You've read enough, you've seen enough, you've looked enough, you're carried away enough. You've got yourself there and you have been influenced by the market in general. And so usually at the point in time it's reaching you, the smart people have already seen it. And that's not to say that, the viewer is not being smart. This is the reality of the situation. These crypto ICOs, TradFi invented all of this low float, how they launch with 1% of the token supply. People think this only happens in crypto. It's not. That's the reason why this is happening in crypto, is because it's been the model of stocks and IPOs for ages. It's just you don't have a clue. And it's true. It's literally just, once you are awake eternally. You see it for what it is. And what it is disgusting, but you can't fight that level of greed. Mm-hmm. If you bet against it, it's not worth shorting, because the upside is capped at 100%. If it goes bankrupt, the downside from shorting is infinite. It can go up infinitely, and these bubbles can do 10x. You could think this is a good time to short, and it will do another 10x the next week, because once exuberance takes over, it can go anywhere. Don't try and short. It's never going to work. If you just buy stuff, honestly, that's the best advice you need. Long only funds are a reason for that, because shorts, you can get caught with your pants down real quick.
Yeah, it's very true. And I think one thing feels clear right now is we have not reached the euphoric stage of this bull market. It does not, yes, there are signs, but it still feels early. The other thing is, and I know you've commented on this on your X before, is at this point in the market, when Bitcoin starts to hit all-time highs and other tokens are hitting all-time highs and gold's at an all-time high and stocks are at all-time highs, there's a real bug in your ear saying, hey, you're not making enough. You're not taking advantage of this enough. And so there is this like real chasing mentality that comes in where you start to chase, right? You start to chase the next 10x or the next 100x. You try to over manage your portfolio when really patience often wins. What's your thoughts on positioning your portfolio in as we head into these euphoric times?
You do just, unfortunately, it's really boring. That's the problem. It's the advice here, not financial advice. Although I did used to be a financial advisor, but I'm not technically authorized to give financial advice by the regulator, so not financial advice right now. So to labour that point a bit much. So it's super hard to not get carried away with euphoria, like, and it is so boring to say, but honestly, it's, buy spot, don't play around with leverage. You're going to get hurt. Everyone does. Everyone is smart. But the best saying is, if you don't know about the fool in the market, then you are the fool in the market. And just remember that, because if you're still learning lots and lots of stuff, then you're learning that from people who know far more than you. And it is hyper-financialized capitalism markets. Like, no one's going to be nice to you. You will be used for their convenience. Even as like a retail buyer coming in, like, you don't realize quite how much you are the exit liquidity. And I am as well. Like, I'm the exit liquidity. Like, I'm not holier than thou. I'm just aware of all of the which ways that they will come for me and they will try and, get my capital. Because all financial markets is I am taking your money and giving it to myself. You're just taking bets against everybody. And unless you know enough to think that you will win the majority of those bets because your opponent is not as smart as you are, then you're not going to win. It's so PvP that you need to be taking yourself as an average against investment bankers and thinking, do I know more than them? And apart from arrogance, almost certainly the answer is no. So just play things safe, and don't take these like gambling, like, I made $1 million X on this meme coin seriously, because for every story that you hear like that, there is 9,99999 millions who have just lost everything, and they won't tell you about it because they're embarrassed. And just don't get embarrassed. It's okay to not like go gung ho. Just make money, and you'll always be happy. Just make a bit of money. I feel like I just gave an educational seminar.
That was very nice. I mean, it's so true. It's the very hard to take that, put into practice, but there's a lot of truth in what you just said.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. I want to touch on Robinhood's outage today. Let me just pull up the news here. So news broke earlier this morning that tens of thousands of Robinhood users reportedly were unable to access their accounts as there was an outage. And at the same time, AMD was surging as a result of an announcement of their partnership with OpenAI. And so there's speculation that the reason this outage is happening is because AMD is surging, and basically Robinhood is protecting their relationships with their with market makers that they partner with, which brings back memories of GameStop and actions that Robinhood has taken in the past. What are your thoughts on this?
I think it's like a bit like with this one in particular, it's a bit like, oh, bless you. Like you think you've taken it down, have you? your small like portfolio that you have on Robinhood, all of you have got together and no, this is like one of the biggest chip manufacturers. This isn't like some bankrupt dealership like when they like do Hertz or AMC or like we like the stock. You're starting from a base that is very, very low, and therefore you get this effect that comes with it of we were first and we knew this and we're early and everybody else will think they're early, etc., etc. This is advanced micro devices, Taiwanese-based semiconductor manufacturer that literally sells like some of the top chips to the top companies in the world. Like, give it a rest. Your 10 grand, the 30% you made overnight is not breaking the bank. It's true, the overall sentiment, I get it. But there's a line between knowing, just how bad the financial industry is versus knowing that your size is not size. Like it's AMD 30% increase. Like, calm down. That's not wiping out huge exchanges. It's not even on the level of GameStop. So people have got a bit suspicious. The reason why like GameStop was so concerning that they did have to do that is because of the fact that it had a heavy short lending positions against it. People were betting that basically betting it would go bankrupt within like 2 weeks. That was what the market was saying. And from that base, it's quite easy to get up. You're pretty at the lows there. And so you lift it. But this is one of the most well-known chip manufacturers in the world. Like, this is no grassroots movement of they're, stopping the people. Like, calm down. Like, it's not that big. If there's not the short interest, then they're not going to like get keeled over by people being 30% up on a chip manufacturer. Like, not everything's a conspiracy. Although I see conspiracies in absolutely everything. And don't get me wrong, GameStop was this, but this is just like, guys, bless you, but nah.
Okay, so a bit of a nothing burger.
It's a storm in a teacup.
Yeah, exactly. Yeah. Well said. That's well said. Okay, final thoughts before we let you go, Dominic. I want to talk a little bit about tokenized stocks. I'm going to bring up a tweet that you put out maybe about a week ago, and you commented on how NASDAQ filed with the SEC to tokenize stocks and how everyone is excited, but tokenized stock is still stock. And as Commissioner Pierce will remind you, tokenizing stocks only matters if the market is global. Talk to us about the current state. A lot of people in crypto love to talk about tokenized stocks and the potential of tokenized stocks, but there has not been a big uptick in the actual volumes of tokenized stocks. Where are we in, and maybe you can talk a little bit about Alvera and what you're building there and the vision of where we are right now in the story of tokenizing stocks versus where we will be in the next 5-10 years?
So it's it's on one side, it's good for for us, Alvaro being the fact that we do, baskets of tokenized assets, whether it's crypto or whatever. But on the other side, I do know the financial industry. And in fact, I think pinned on my X actually is I wrote a Medium about solving capitalism. I think it's a pretty good plan. It basically allows for income tax to go and corporation tax to go and be replaced by a 1 or 2% tax on derivatives, because that will cover everything that everyone has ever had to pay. Global taxation solved by just a 1 or 2% tax on derivatives. But it sounds so easy, but it's not, because the problem is regulatory arbitrage. And not many people know this. And I'm probably going over like the head of listeners here, but essentially, with these tax policies and with these changes and with these treatments, it doesn't matter if the US does it. It doesn't matter if the EU does it. It doesn't matter if the UK does it. It's if they all do it together. Because the reason why, a 1 or 2%, even though derivatives as a market is worth like quintillions, because all a derivative is I'm an authorized counterparty, you're an authorized counterparty, let's make a bet with each other on the price of an asset we don't own, and we'll charge each other fees for this. What a racket. Don't need to own anything, don't need to spend any money, you just need to make an agreement with another person and speculate against each other, both put fees in. Where did the fees come from? Well, they were from the derivative. Oh, you bought the asset? No, we just owned it and speculated. It's charging fees on money that never existed and they never even had in circulation anyway. So it doesn't make sense. And so therefore, if you were to tax that waste, because it's just banks billing other banks over and over and over again, and their balance sheets getting bigger, nothing is owned, transacted, extracted. It's a complete leech on the economy, because there's zero gain. There's no efficiency gain whatsoever. It's just banks making money with other banks. And it looks good on the balance sheet. And so 1 or 2% tax on that would mean that nobody in the world, corporate or employee, would ever need to pay tax again. Sounds nice. But if one person goes first, if the US says 2% tax on derivatives, everyone, let's solve tax for everyone globally in the world. France comes along and says, we're going to do this too, but let's do 1%. Okay, suddenly everyone is going to use France because our 2% is being undercut. So everyone goes and starts just not using the US banks for this anymore, because they're trying to enforce this global tax law. And so everyone goes somewhere else. And then another one comes up and goes, okay, we'll do this for 0.5%. And it doesn't matter because it's regulatory arbitrage. If you can't do it somewhere, you'll do it somewhere else. And so without global agreement and adoption, it's just going to be little silos. Just, it won't get the full huge rush. And that's not necessarily a bad thing for those who work in tokenization. And the reason why is that, you're trusting public servants and a public regulator to catch up with the times to the point all around the world. Okay, well, there's going to be a huge vacuum to fill for a huge amount of time, because they're not going to get their act together. Like, they're not going to actually be the grown-ups and get this globally enforced. So that's what we've got to do. We've got to be pushing this, and we've got to make sure that this can get aligned. And, people discount the role of industry in this sort of regulation a lot. And that's the part where we as a sector, crypto community, is finally getting some weight. We can actually throw some weight around. We actually can influence politics. That's how big crypto has gotten. And that is why this cycle isn't necessarily like the others. I would love for that to mean that everything goes up 2021 style alt season, let's buy monkey pictures all day long. Amazing. But the capital will flow. However, there is 99% of the market that is utter, just irrelevant, unneeded stuff. And the adults are coming into the room. and they're going to be using the adult stuff. And that's where there's going to be a push, is actual infrastructure. That's all that matters. Like, people have built for the user, and it sounds lovely, but the current user of crypto now is not the blockchain's end user. The blockchain has all of these promises to make finance more efficient, to save huge amounts of costs. Well, where are they? Like, they haven't come yet. And so if that is finally solved and they can get around like the safety concerns because the regulation is gone, they didn't come to take part. The banks take over, and they will grab this from under us, and they'll forget that we ever existed. They will do with it what they want to do with it. And so position yourself accordingly. Be aware that the grown-ups are coming into the room. When you're looking at what to buy, think, what would my dad buy? And unfortunately, your dad's probably a bit boring. And he's going to buy what is nice, safe, and cheerful, because that's what dads do. And you can innovate around it. You can convince your dad why, he should be using this new phone. You can work on him. But if you leave it down to him, he's going to buy what is safe, and he's going to buy what he understands. And if that's where the capital is going, that's where you go.
Mm-hmm. It's simple, boring, but it is true. In this market context,
I wish it wasn't.
There's always the importance to look at risk reward, right? And to look at who the next buyer is. And the next buyer, the risk reward of the top 50 tokens is, for good reason, is lower risk and lower reward, but then trying to go down the stack. But you take the advantage of that lower risk. And then at the same time, yes, you're right. Like, that's why I like, and the Milk Road team likes the revenue meta so much, right? And
I hate that it's even a meta. That's like, that gave me such like ick about the industry. The fact that we gave it our own word of rev. And then
I know. Yeah.
Meta, like, guys, this is supposed to
we
be.
We have to celebrate the businesses that are actually making revenue in order to make them noticeable to investors. And I think that is to me, I really thought, look, we were a little bit wrong so far this cycle, in that we thought that meta would take off earlier in this cycle, when really it was like the Bitcoin and the meme coin meta that absolutely crushed. Bitcoin makes sense. The meme coin meta that crushed 2024, nobody really expected that to happen. But now I do think we are in a place where we will finally see DeFi apps and L1s that have real revenue. You look at something like Solana and real users, and obviously Ethereum as well. I think those are the tokens that will do really well for the rest of the cycle. Now, that being said, we're also entering the euphoric phase of the cycle when, quite honestly, everything will go up. So I also will say to you, if you're listening to this, have patience and don't try to overtrade your portfolio if you've been in something for a while. So long as you are looking at it and you can say, yeah, I still think that we are in that euphoric stage, then I think that, be patient is really the best advice.
I've got one for you. This is a good one. Go to some of the top, let's say that you got down to the top 50, because even some of the top 50, like, you could end up with people buying Polkadot here if you're not careful.
Yeah, there's some ghost chains in there for sure. Yeah.
What's very important, I find, is to look for the top tokens, because a lot of times, unfortunately, these are propped up valuations. In fact, you should look at like some of these dinosaur coins. Like, no one uses them, like BSV or like even Bitcoin Cash. No one ever uses that. Like Litecoin, like nowhere. So what's important to do is to basically go onto the L1 that you're looking at page, go back to when you had these trends. How quick were they to embrace and jump on just the next big thing that people were talking about? And that is a sign of a unserious business that does not have a reason to exist and is desperately trying to find one to stay relevant. And that's not someone you want. It's like a Tezos or Near Like I've never met anyone building on near in my life, and yet, it gives this oh, another one. No one. I even spoke to someone at Boson Protocol once, and I asked them, "Can you tell me what you guys do?" They had no clue. Like I have no clue to this day what Boson is. They keep on reinventing it. Metaverse, then a payment exchange in the metaverse. What, like money? Yeah, but VCs own ours. And then they were RWA, and honest, the messaging was just there, and the market caps are never justified. You just need to find someone that's been building a vision, and they haven't actually changed it. They're still building what they liked. But I think the biggest token or coin that I can give that you can see that they're trying desperately, but people haven't cottoned on yet, is Avalanche. Always going after the meme meta, like trying way too hard, like launching like a cultural fund, which is basically a meme coin fund. Like, you can see that they're clinging on for relevance desperately, and it's just gone over that line of desperation for me. Like, there's nothing wrong with a bit of lip service to a trend or meta, but to actually like pivot your whole business model and throw your weight around, make people know you're in this, and for it to always fail, like NFTs and everything, to me, unfortunately, Avalanche is no longer. I used to compare it to Solana, and there is no comparison now.
It's a very interesting take. Dominic, I'm going to end it here because I think you and I could keep talking for a while, but really appreciate you joining us today. Thanks so much for your time.
Thanks for having me.
Thanks for listening. And everybody, got to remind you, as always, none of today's episode is financial advice. I'm not your financial advisor. Dominic is not your financial advisor. You should speak to a professional if you need help with your investments. Today's episode is for educational and informational purposes only. And as I mentioned at the beginning of the show, you got to check out the two reports that the Pro Team put out this Saturday. One is the October outlook for the market, and the other is the macro setup and why it is truly unlike anything we've ever had before. Check them out in the link in the show notes. Have a wicked awesome day, everybody. We'll see you back again tomorrow. We're sending Kyle Reidhead, our head of research, to the UK's largest Web3 summit. I'm talking about Zebu Live, happening October 21st and 22nd in London. Want to join? Use our code MILK to get 20% off your tickets. Hit the link in the show notes and say hi to Kyle for us. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.